Hi and welcome to the Trade of the Day for the 23rd of September. My name's Tom. I'm a senior analyst here at Trendsignal, and I want to run you through an opportunity on the US30 that's just occurred on the open of the market that took us out for about 193 pips by the end of the opportunity. Before we jump into that, I want to go through how we find these trades in the first place, the steps we go through to make sure that they're strong opportunities and not wasting our time. Yeah, let's jump in. The only thing I will say before we do, for a bit of context, Trendsignal, we've been teaching people to trade the market since 2003. We're based in the Cranfield University Technology Park. But let's show you what we do rather than who we are. So in this case, what we look for on our lower time frame strategy, intraday markets, we look for arrow flips to tell us there are opportunities presenting themselves. We then basically need to look for structural and momentum reasons that we should want to take the trade that's kind of suggested by the system in the first place. So this is a very particular time. It's trading over the open. Now, some traders don't like this because it can be quite volatile. All that we do is we won't be taking any trades when we go into the open. Once the open has passed, we can then look for opportunities to jump into the market. But really, the analogy, and it's a bit of a terrible one. If you're a duck trying to surf on the pond, you want to be riding the waves. You don't want the boulder to hit you on the head. That's the logic, if you like. In which case, we do get an entry 4 minutes after the market's open. It's 34 past 2. Black arrow flip. Now it flips inside these bands that you can see on the screen. When it's inside, this means normally it's a bit of a lower energy trade. The market isn't sufficiently stretched. In this case, the reason is we've had the rocket up, we've had a bit of a pullback back down. Really, to make this kind of really explosively move up, we need the initial movement to be in the opposite direction. But we're inside the bands. What this means, we need to respect the long-term trend and have a bit more of a kind of a bullish structure on exactly where the candles are sitting. So we'll go through this step by step. First of all, black arrow inside, green vector averages, looking at short-term momentum in our favor, check. We then look at candle position. We want to be in the upper quarter, so above this purple line. We're actually well beyond that. We're outside of the envelope, check. We then want to look for the R ratio. Now, this is going to tell us if the market is wide enough to trade in the first place. As long as it's green and positive, you're good to go. You're very rarely ever going to find this being red on the open of the market. It is quite an active time, so we're all good as well. The final point, we need to look at this middle line here, this blue line. This is blue because it's long direction. It's looking for bullish momentum over the higher time frame. This also changes to orange if we're looking at a sell motion, but at this time of day, everything's just ratcheting up. So we have all 5 steps confirmed, telling us that we can enter this trade at the start here where my cursor is. And really, there's kind of 2 exit points you can consider when you're looking at this opportunity. Okay, you can follow the black arrows up, and this will lock in your profit as you go. This gives us one result. And then we have the theoretical best result you can take from this trade. So I will quote what this number is. I'll be honest with you, I didn't achieve it myself. I got a little bit under it, about 10 pips under. But that would be on this candle here, the very top of the market, before we pull back down, a little period of consolidation in the market, hitting the arrow, and then we can start looking for other trading opportunities instead. So what are those numbers? Well, if you'd have just followed the black arrow, as many of our starting traders would do, that was 145 pips worth of movement. If you were the perfect trend signal trader, you'd have taken 193 pips worth of profit out of the market. What separates a good trader from a great trader is the ability to pull those extra pips out. As I say, I was 10 pips off myself, but there'll be a few of our clients who would have beaten me. Some of these guys are really, really good. So, bit of context. If you were trading at a pound per pip, it's £145 on really the worst you could have done, 193 on the best. When you start trading at higher sizes, I mean, you don't even need to go that high. By the time you're trading at £2 per pip, I mean, that's £387 on the best possible move on this opportunity. But what makes this strategy so powerful in particular is these are 2-minute candles. This is something that occurred over 30 minutes. Nearly £400 for 30 minutes worth of work. I don't know about you, but I think that's a pretty good deal. If you want to see how we run these strategies, you want to trade alongside us, because we put on several live workshops a week at this point where we not only teach you it, but we actually trade these lives as the trade occurred, then feel free to join us. The next session we have will be tomorrow at 7 p.m. There'll be a form around this videos. We take questions the entire way through, and hopefully I'll see you then.